Thank you, sir, for giving me the opportunity to speak on important bill, the Banking Laws Amendment Bill 2024. Sir, in 1926, then the Government of India appointed a commission which is known as the Hilton-Young Commission to express their views regarding the functioning of Central Bank of our country. On the recommendation of Hilton-Young Commission, the RBI Act was passed in 1934 and RBI started its functioning from 1st April 1935. Earlier, the central banking functioning were performed by the Imperial Bank of India, and after the nationalization of it on 1st July 1955, it came to be known as the State Bank of India. Since then, the RBI acts as the central bank of our country. Sir, after the enactment of RBI Act 1934, the Banking Regulation Act 1949, State Bank of India Act 1955, Banking Acquisition and Transfer of Undertakings Act 1970, Banking Companies Acquisition and Transfer of Undertaking Act 1980. There are so many loopholes, and in order to overcome these loopholes, the Finance Minister has brought this bill, that is Banking Laws Amendment Bill 2024. And I congratulate to the Honorable Finance Minister for bringing this important bill. Deputy Speaker, sir, the Banking Laws Amendment Bill 2024 seeks to amend the key banking regulation with the objective to improve governance standards, to provide consistency in reporting by banks to the Reserve Bank of India, to ensure better protection for depositors and investors, to improve audit quality in public sector banks. The proposed amendments are a comprehensive legislative effort aimed at modernizing and enhancing the regulatory framework governing India's banking sector. Drawing lessons from past mistakes, the Modi government is committed to rectifying previous wrongs and ensuring good governance in the banking sector. The proposed amendments are not merely regulatory changes. They represent a bold step towards enhancing transparency and accountability, safeguarding the interest of investors, and rebuilding public confidence in our financial institutions. This initiative underscores a vision for a banking system that prioritizes integrity and trust, paving the way for a brighter economic future for all citizens. Sir, previously the cooperative banking sector has faced a crisis of confidence, large due to the multi-crore loan scams involving Punjab and Maharashtra Cooperative Bank, Maharashtra State Cooperative Bank, and Corbnor Service Cooperative Banks. The scandals in the cooperative sector have created a significant trust deficit, leaving millions of ordinary depositors vulnerable and anxious about the financial future due to a legacy of misgovernance. The NDA government, in response to the PMC scam, introduced of multiple state cooperative banks. The Act aims at improving cooperative banks' management and regulation as to the protect the interest of the depositors by bringing these banks under the supervision of the RBI. To ensure good governance, improve access to capital while protecting investors' interest, the bill proposes the extension of the tenure of cooperative bank directors and permit directors of central cooperative banks to serve on the boards of state cooperative banks with the goal of promoting professional management and enhancing governance within cooperative institutions. Sir, the shallow and failed attempts towards furthering financial inclusion under the UPA regime were marred by inefficiencies and a lack of genuine commitment. However, the Modi government, Pradhan Mantri Jan Dhan Yojana, has been a game changer by opening over 53 crore bank accounts in the past decade. The scheme is the largest financial inclusion initiative aiming at universal and affordable access to formal banking services, integrating marginalized sections into the economic mainstream. Pradhan Mantri Jan Dhan Yojana success is a reflection of the Modi government's larger vision of banking for all, correcting the failures of the past government that left millions unbanked and vulnerable. The amendments proposed under the bill collectively aim to strengthen the banking framework, making governance more transparent and financial services more accessible for marginalized groups, representing a significant step towards the Modi government commitment to good governance and financial inclusion for all. The previous UPA government has failed to address the needs of the ordinary citizens and include the marginalized in the journey of success and inclusion. While the UPA era was characterized by inefficiency and a lack of commitment to empowering the marginalized, the Modi government has harnessed the power of the Jan Dhan, Aadhaar and mobile trinity to facilitate a direct benefit transfer system directly into their bank accounts, free from the clutches of middlemen. This approach guarantees that support reaches the marginalized section but also provides timely financial assistance for essential schemes such as pensions, scholarships, and subsidies for basic goods. For the first time, constitutional recognition has been granted to the National Commission for Backward Classes, safeguarding OBC rights within the governance framework. The regime of neglect and exclusivity is long gone, and under the leadership of Modi government, we are witnessing a new dawn in financial inclusion that is reshaping the future of our nation. Sir, gone are the days when the Indian banking sector was plagued by a cesspool of bad loans, vested interest, corruption, and mismanagement. Under the previous UPA government, the banking landscape was marked by a gross NPA ratio that scored to 12.3% by September 2013, largely due to political interference in lending decisions and the concealment of bad loans. This negligence not only eroded public trust but also inflicted significant losses on banks, jeopardizing the savings of countless depositors. But to recover the revive the banks, the Modi government constant reforms targeted towards improving the health of the financial sector led to a remarkable turnaround, with gross non-performing assets ratio declining to a multi-year low of only 0.6%. Sir, the UPA government neglected action towards the financial health of the banking sector, led to the banking sector reaching a critical low, with banks being reluctant to lend, especially to small and medium-sized enterprises that drive employment. The urgent need for its revitalization was realized by the Modi government that made concerted effort towards transforming the banking sector into a vital asset for economic growth and restoring public trust in financial institutions. Through a comprehensive 4R strategy of recognition, resolution, recapitalization, and reforms focused on enhancing transparency in non-performing assets, effectively resolving stressed accounts, recapitalizing public sector banks, and instituting necessary reforms. The proactive approach has resulted in recoveries exceeding rupee 10 lakh crore from bad loans between 2014 and 2023, significantly strengthening the banking ecosystem and fostering a responsible and clean financial system. Honourable Sir, as proposed under the present bill, the expansion of the scope for transferring unclaimed amounts to the Investor Education and Protection Fund (IEPF) signifies the commitment of Modi government to protect investors' interests and promote financial literacy across India. The bureaucratic inefficiencies and lack of transparency prevalent under the UPA government led to languishing of unclaimed funds, with investors being unaware of their rights to claim them. In contrast, the Modi government is committed to actively managing and regulating these unclaimed funds, thereby empowering investors and fostering a more transparent banking environment. This proactive approach of the government protects investors' rights and fosters financial literacy, helping individuals make informed decisions about their investment. Sir, under the visionary leadership of Honorable Prime Minister Shri Narendra Modi ji, the push for digitization in the banking sector has marked a transformative shift compared to the previous UPA government. The establishment of 75 digital banking units across various districts represents a significant step towards enhancing financial inclusion, particularly in rural and semi-urban areas. Gone are the days when digitization was merely a dream reserved for the affluent, unlike the UPA era, which struggled with inefficiencies and limited access. The Modi government has prioritized initiatives like DigiDhan mission and platforms such as UPI and Bheem, leading to a remarkable increase in digital transactions. Furthermore, programs like Pradhan Mantri Jan Dhan Yojana have opened millions of bank accounts for previously unbanked population, empowering citizens and ensuring that banking services are accessible to all, aligning with the vision of a self-reliant India. The amendments proposed under the bill are designed to further enhance the regulation and governance of banks, aiming to create a robust and reliable framework that supports the ongoing digitization of banking services and ensures equitable access for all. The drive digitization is not just about convenience, it is about creating opportunities, driving innovation, and building a more equal society. Sir, making a fundamental shift towards a better, accountable, and transparent banking system, unregulated practices are over, and we are witnessing a new dawn for the banking sector, while the UPA government mismanagement left the banks vulnerable and struggling, resulting in a significant trust deficit. The Modi government has undertaken significant reforms to rejuvenate the banking landscapes, focusing on restoring confidence and enhancing service delivery for all citizens. With the proposed amendment increasing the number of nominees, allowing the appointment of up to 4 nominees per account, enabling simultaneous nominees, the government aims at easing and bettering the banking services for the general public. The transformation has emphasized on the critical role of a robust banking sector as a cornerstone of economic growth and development, transitioning from a period of scarcity to achieving strong banks for a strong economy with the broader vision of a self-reliant India. Sir, in my concluding remarks, I would like to say that the Banking Laws Amendment Bill 2024 seeks to amend the Reserve Bank of India Act 1934, the Banking Regulation Act 1949, the State Bank of India Act 1955, the Banking Companies Acquisition and Transfer of Undertakings Act 1970, and the Banking Companies Acquisition and Transfer of Undertakings Act 1980. The proposed bill aims to improve the audit quality in the public sector banks, ensure consistent reporting to the RBI, and extend the tenure of directors in cooperative banks, streamlining the banking operation, aligning them with contemporary financial practices. I support the proposed amendment and urge to all the honourable members of this House for their support in the proposed amendment. Thank you very much.
Thank you.